If you're receiving Social Security right now, I need you to hear this, because there are 5 specific things happening inside that system in 2025 and 2026 that can quietly change how much lands in your account, delay what you're owed, or in the case of the 4th one, the one I want you to stay with me for, stop your check without any warning you'd recognize as a warning. Most people don't know the clock is running. That's the real danger. 3 of these 5 things are fixable with a single phone call or 10 minutes at a computer. One of them is running on a deadline right now. And the 5th one, which I'm saving for last, isn't a warning at all. It's a law signed this past January that means millions of Americans who spent their careers as teachers, firefighters, and government workers may be owed money they're not yet receiving, and a large portion of those people haven't gone to check. Stay through all 5, because whether you're in the warning camp or the good news camp depends entirely on your own situation. And by the end of this, you'll know exactly which one you're in and exactly what to do about it. My name is Walter. I'm a state bar licensed estate attorney, and for more than 15 years, I've sat across the table from families going through their Social Security statements, their Medicare notices, and their financial paperwork line by line, translating the fine print that federal agencies count on most people, never fully reading into something a person can actually act on. Social Security isn't complicated at its core, but the gap between what people assume about how it works and how it actually operates is where real money gets lost, and that gap is what we're closing today. Before I say anything else, let me address one thing directly. No, the government isn't canceling Social Security. No, there's no legislation about to strip away what you've earned. If you've seen something making that claim online, you've encountered either misinformation or someone using fear to generate clicks. That's not what we're talking about. What we're talking about are 5 specific mechanics inside an existing functioning system that most people were never taught and that no one was assigned to explain. Let's go through them. The first change applies to anyone who filed for Social Security before their full retirement age and is still earning income from a job. There's a rule called the earnings test, and it works in a way that almost nobody would predict without being told. When your earned income crosses a certain annual threshold, for 2025, that figure is in the range of $22,000. The Social Security Administration withholds $1 of your benefit for every $2 you earn above that limit. Here's what catches people. SSA doesn't collect this adjustment in real time. They reconcile it later when your earnings data comes through the tax system, and when they discover a gap between what they paid you and what you were owed, they issue a formal determination. It's called an overpayment. That determination triggers a notice. Most of the people who receive that notice have no idea what they're holding, and we will come back to exactly why that matters. Tom is 63 years old. He filed for Social Security when he stepped back from full-time work and picked up a part-time position, bringing in about $34,000 a year. Tom wasn't doing anything wrong. He simply didn't know that SSA expected him to proactively report his estimated annual earnings so the agency could adjust his monthly payments in real time, rather than discovering a shortfall years later through tax reconciliation. He assumed everything talked to everything else automatically. It does, eventually. But Tom didn't understand what happens in the gap between when SSA paid him and when SSA discovered the discrepancy. Here's what Tom needed to know. Call the Social Security Administration at the start of each year you're working and collecting, give them your best estimate of what you'll earn, and let them adjust. One call. It prevents the overpayment notice from ever being generated, and the money SSA withholds during the working years isn't lost. When you reach full retirement age, SSA recalculates and credits you for every month your payment was reduced. The long game isn't damaged, but that overpayment notice is the most consequential piece of paper in this entire conversation, and we will come back to it. Before we go further, there's one thing I need you to hear. If you receive a phone call from someone claiming to be the Social Security Administration, telling you your number is suspended, your benefits are at risk, or you owe money and need to provide your bank information right now, hang up immediately. The real SSA communicates by mail. They do not call to threaten you. The number you can call with genuine questions after this video is 1-800-777-21213. You initiate that call. They don't call you with bad news. The second thing I need you to do is so simple it almost doesn't sound important. It's the most important practical step in this entire video. The Social Security Administration maintains a contact record for every recipient, a file that holds your mailing address, your phone number, and your direct deposit banking information. Every notice SSA sends, every letter with a deadline attached, every determination we're about to discuss in detail, all of it goes to the address currently in that file. An SSA is not connected to the post office's change of address system in any way that updates your federal record automatically. If you moved 18 months ago and never specifically called SSA, SSA still has your old address on file. I see this constantly when someone moves to be closer to their children, after the death of a spouse, after a change in living arrangements. The letters are going somewhere you're not. This week, go to ssa.gov, create your My Social Security account if you haven't already, and verify that your mailing address, your phone, and your direct deposit information are all exactly current. 10 minutes. It is the foundation on which everything else today depends. The third change involves a word that looks like a typo, but isn't. IRMAA. The income-related monthly adjustment amount is how Medicare charges higher income beneficiaries more for Part B and Part D coverage. SSA collects the surcharge as a deduction directly from your monthly check, which is why people notice it as a smaller check, not as a separate Medicare bill. Here's what trips people. SSA uses your tax return from 2 years ago to calculate your IRMAA, not last year's return, 2 years ago, which means if your income was elevated 2 years back because you sold a home, because a required minimum distribution pushed you into a higher bracket for a single calendar year, you may be paying a Medicare surcharge right now based on a financial picture that no longer exists. Margaret is 72 years old. She sold her family home in 2022 as part of a long-planned downsizing. Sensible decision, it registered as substantial income on her 2022 tax return. Starting in 2024, without any letter that explained what had changed or why, her Social Security check began arriving smaller than expected, she noticed. She assumed it was something she didn't fully understand. 2 years of elevated Medicare premiums later, she learned that the right to appeal had been hers from day one. The form is called SSA 44, the Life-Changing Event Form, and it allows you to ask SSA to use more recent income data rather than the 2-year-old snapshot. Retirement, a reduction in work hours, the death of a spouse, divorce, or a significant one-time income event that won't repeat, all of these can qualify. If your financial picture has changed materially since the year SSA is using to calculate your premiums, that form exists. Most people who need it have never been told it exists. Now stay with me because here's the fourth change, the one I told you about at the very start. And I want you to understand the mechanism, not just the surface, because the surface sounds manageable and the mechanism is what catches people before they can defend themselves. The Social Security Administration has the legal authority to determine, at any point, that they've paid you more than you were owed, for any reason, including their own administrative errors. The overpayment can go back years, and when they make that determination, they send you a notice. That notice arrives in a plain white envelope, the same envelope SSA uses for every single piece of correspondence they ever send, with nothing on the outside to tell you this one is urgent. Raymond is 71 years old. He received a letter telling him that an administrative adjustment from 2020 had produced an overpayment of $9,200. Raymond looked at it and set it aside. He thought the number was wrong. He considered, honestly, that it might be a scam, and that's not an unreasonable reaction, because the overpayment notice looks exactly like the letters scammers send when they impersonate SSA. Raymond told himself he'd look into it when he had time. He didn't write a date. 47 days passed. His son came to visit and Raymond mentioned it. His son looked it up in a few minutes and told Raymond they needed to act immediately. Raymond had 13 days left in his appeal window. They filed that afternoon. Raymond made it. But I want you to sit with how close that margin was, and how many versions of that story I could tell you where there was no son visiting that particular week. The more common version ends with the check arriving cut nearly in half, the family calling SSA to understand what happened, and someone on the line explaining calmly that the window to contest this closed several weeks ago. Here's what Raymond needed to know before that envelope arrived, and here's what I need you to have ready. You have 60 days from the date of the overpayment notice to file a formal request for reconsideration. That's your appeal, asking SSA to review whether the determination was correct. Simultaneously, you can file SSA Form SSA-632, the request for waiver of overpayment recovery, which argues that the overpayment wasn't your fault, and that repaying it would cause genuine financial hardship. Filing the waiver generally pauses collection while SSA reviews it. These are two separate forms making two separate arguments, and you can file both at the same time before the same deadline. One challenges the math. The other challenges whether you should have to repay even if the math is right. And the most critical sentence in this entire video is this: if you receive any communication from the Social Security Administration stating that you owe money and giving you a deadline, open it the day it arrives, find that deadline, and act before it passes. Not because you agree, not because the number makes sense to you, because once that window closes, it doesn't open again. Everything else in today's conversation is fixable. That deadline is the one thing that is not. Take a breath, because here is the fifth change, and this one is genuinely good news. The Social Security Fairness Act was signed into law on January 5th of 2025, and what it did was eliminate two provisions, the windfall elimination provision and the government pension offset, that had been quietly reducing Social Security benefits for millions of Americans across decades. These two rules specifically affected people who built careers and jobs that didn't pay into Social Security, certain public school systems, state and local government agencies, fire departments, police departments. If you worked in one of those positions and also accumulated Social Security credits through other employment, those two provisions cut your monthly check, sometimes by hundreds of dollars every single month, because of the pension you earned from public service. That law passed in January of 2025. Both provisions are gone now, retroactively to January of 2024. That means your monthly benefit should already be higher, and you may also be owed a lump sum retroactive payment covering all the months between January 2024 and when SSA processed your specific account. Eleanor spent 31 years in a public school classroom. When she filed for Social Security, the windfall elimination provision reduced her monthly check by $260, $3,120 a year, every year, for 6 years. The law has passed. Eleanor should be receiving her full benefit now and should have already received her retroactive payment. But Eleanor hasn't logged into her My Social Security account to confirm whether any of this has actually happened to her account. She's waiting to see what appears. What I need Eleanor to do, and what I need you to do right now, if any part of your working life involved a public sector job with its own pension, is simple. Don't wait. Log into ssa.gov. Look at your current monthly benefit amount and compare it to what you were receiving in December of 2024. If the number hasn't increased, call the Social Security Administration directly and ask specifically about your account and the Social Security Fairness Act. The retroactive payment doesn't find everyone automatically. For some affected recipients, SSA needs you to initiate the inquiry. That money isn't hypothetical, it belongs to you. Here's something worth sitting with before we get to the action steps. Between IRMAA, surcharges that can be appealed and eliminated, overpayment notices that can be contested and waived, and Social Security Fairness Act adjustments that are sitting unclaimed, some of the people watching this right now are looking at more than $10,000 in money that is either being withheld incorrectly, assessed without grounds, or waiting in a system that won't chase you down to deliver it. The system was never going to tell you, but you can go get it. So here are 5 things, one for each change, and I need each of them done this week. If you're collecting Social Security before your full retirement age and you're still earning income from a job, call SSA now and report your estimated 2025 earnings. Don't wait for a year-end reconciliation to generate a notice you'll have to fight. Go to ssa.gov, create or log into your My Social Security account, and verify that your mailing address, your phone, and your direct deposit information are all current. If you're paying Medicare premium surcharges and your income was significantly higher 2 years ago because of a one-time event like a home sale or a large distribution, look up SSA Form SSA 44, the life-changing event form, and file it. If any letter from the Social Security Administration is sitting somewhere in your home with a dollar amount and a deadline on it, find it tonight. File the appeal. File the waiver. Act. And if you spent any part of your career in a public sector job with its own pension, log into your SSA account this week and check whether your monthly benefit amount has increased since January of this year. If it hasn't, call and ask. That's it. 5 things. The Social Security Administration isn't your enemy, but it isn't a caretaker either. It's an automated system running tens of millions of records, sending correspondence to addresses on file, counting days on a calendar, and closing the books when no response comes in. The seniors who stay whole through all of this aren't the ones with the simplest situations. They're the ones who understand that the system doesn't know who they are as a person and act on that knowledge. You understand that now. And that puts you ahead of most people who will face these same situations without knowing what you now know. Before you close this video, I want to hear from you in the comments. If you spent any part of your career as a teacher, a firefighter, a police officer, or in any state or local government position with its own pension, tell me whether you've already checked your Social Security benefit and whether you've seen an increase since January. Leave your state below too. And if any part of this was useful to you, send it to one person you care about who's still working through their retirement, not for this channel, but for them, because the odds that they've already found this information on their own are lower than either of us would like. One more thing, next week I'm going to cover something happening in the banking system right now, a specific federal framework that allows a financial institution to legally restrict your access to your own money, not because you did anything wrong, but because of your age. Most banks aren't explaining it to their senior customers. You need to know it exists before it happens to you. Subscribe and turn on the notifications so you don't miss it. Protect what is yours.